Bill here, September 20th, 2023. Today we want to begin a discussion, what are the best ways to invest in gold? And to start off with, let's talk about why is it a good idea to invest in gold? Well, we have gold up 2% since the last week. We have gold up 17% from a year ago today. And we have gold year to date up 6%. Now, that's just recent performance. If we look at long-term performance, we're averaging around the 8% a year area, but we believe over the next 9 or 10 years, it'll average somewhere around 12 or better. And there's reasons for that. We've discussed that before, but that will just allow it to get back to its long-term average of 8. So that's one of the reasons why, but there are different ways of investing in gold. Today I want to talk about some alternative ways of investing in gold and why those are not often are not the best way. But they're out there, and there's millions of dollars that are chasing gold named investments. And what I'm referring to are paper gold investments. And these might be things like exchange traded funds or ETFs. There are a lot of mutual funds out there that have the word gold in the name. And often, most of the time, there's no way for the average investor to convert paper gold investments into real physical gold. Now, if you're an institutional player, you may be able to do that at scale if you have hundreds of millions of dollars to invest in certain gold-linked funds. But for the average person, that's not even a possibility. So let's talk about how these alternative investments and why they're not the best ways to invest in gold and what are the best ways. So when we think about paper gold investments, most of the time all they're doing is tracking the spot gold paper price. And that's what they're tracking. So even on their best day, they're leaving a lot of gains on the table. And to explain this, let's look at a gold fund. Typically when gold begins increasing at rapid amounts, there's large demand for physical gold. And oftentimes the premiums on gold per ounce can be $200 to $300 sometimes over the spot price. And so when you're looking at a paper gold investment that's tracking the spot price, they're leaving all those premiums on the table when the demand for gold is high. So you're not getting quite the return there, but you're also not getting the protection that is one of the main reasons people invest in gold. And what I mean is, I'll use oil for an example. A couple years ago, the oil hit a price of minus $38 for a barrel of oil. In other words, the barrel itself was worth more than the oil. And there are ETFs that track the price of oil. Some of those ETFs, people that jumped in trying to lock in an almost guaranteed future gain in the increase of oil from minus 38 to what the price for real oil should have been, ended up with pennies on the dollar in that investment because the paper oil investment blew up right at the time when it should have been providing the protection or the gains that people were looking for, and they ended up getting neither. And so a similar thing can happen with gold ETFs. Whenever demand is high and there's a disruption in the system, right now there's competing gold markets that are establishing different prices for gold. The Shanghai Gold Exchange, oftentimes you've got a $50 difference between that and the price that's being established in London. So we probably are going to see that continue, where the price for real gold is being settled in other areas of the world, and that's going to impact the physical price, but it doesn't necessarily impact the spot price. So For that reason, the best way to invest in gold where you have what you have, and you know what you have, and you're not depending on some other firm or an ETF management team to not drop the ball, is by owning physical metal that you can touch and feel. Now, whether you store that in your own vault or in a professional vault, that's another issue. But the main point is you have physical gold that you own, and there's no counterparty risk. That's the best way to own gold, and it allows you to capture all the gains whenever the demand is tight and there are exceptional premiums over the spot price. It is only the physical holders of gold that will have all those gains for their portfolio. The other issue is you also avoid the losses. Gold has never been worth zero. Unfortunately, paper investments, even those connected to gold, can drop to zero. So those are things to keep in mind. Stick to physical gold, and next week we're going to discuss the different types of physical gold and which ways are best to invest in for different situations, and why the best is usually a combination of the various types of physical gold. Thank you for tuning in. We look forward to speaking again with you soon.